Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
In today's economic calendar, all eyes are on the Black Star events, particularly the Canadian inflation report and the retail sales report from the USA, both scheduled for release at 2:30. These events are expected to create significant volatility in the currency markets, presenting some fantastic trading opportunities for our fundamental traders. But before we continue, remember to stay until the very end, as we will be sharing our technical analysis on foreign currencies, indices, and commodities.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the dollar continued to face challenges as it struggles to recover from last week's plunge. The bears remain in control, supported by growing bets for a less hawkish Federal Reserve, with the expectation of a softer landing for the economy. The greenback sell-off has coincided with a drop in Treasury yields. The next rate hike, widely anticipated this month, could potentially mark the end of this cycle. Moving on to digital currencies, Ethereum is experiencing a corrective phase, dipping below the $1,900 level against the US dollar. Although there was an attempt to rally above the $1,950 resistance, Ethereum faced resistance and retraced back down to the 1,900 support zone. The current price action indicates a potential fresh upward move. Let's turn our attention to Wall Street, where most stocks gained ground in anticipation of quarterly reports from leading companies. The Dow Jones Industrial Average secured a 0.1% increase, while the S&P 500 rallied 0.2% and the Nasdaq surged 0.4%. Last week, bank earnings started on a positive note, with JP Morgan Chase and Wells Fargo impressing Wall Street with substantial profit gains. Now, all eyes are on Bank of America and Morgan Stanley as they report their second quarter results today. In the commodities market, oil prices dropped by over 1.5% due to weaker than expected Chinese economic growth, raising concerns about demand from the world's second largest oil consumer. Additionally, a partial restart of halted Libyan output added further pressure to prices. Lastly, let's discuss gold. The precious metal remains in a defensive position as market players eagerly await the United States retail sales data to provide direction. Mixed concerns about China and the US dollar, failure to react positively to recent data, and cautious optimism in the market contributed to the indecision observed in gold trading. Now it's time for the highly anticipated technical analysis segment. Remember, our technical analysis scenarios are subject to market conditions and should be used alongside other relevant indicators and analysis tools. Exercise caution, conduct thorough research, and make well-informed trading decisions. First, let's analyze the USD-ZAR currency pair. It is currently trading just below the primary resistance level. A close below 17.99 could trigger further decline towards 17.8. Conversely, a break of the resistance with a close above 18.2 could potentially initiate fresh bullish momentum. Next, we shift our focus to the Dow Jones analysis. The US 30 is currently trading just above the primary resistance level. A close above 34,625 could trigger renewed bullish momentum, potentially pushing the index up towards 35,000. Finally, let's examine the analysis for crude oil. WTI is currently trading within the primary support level. A break and a close below the support at 73.1 could extend the decline down to 71. And lastly, looking at gold. The yellow metal has finally broken through the diagonal resistance level. If there's a close above 1963, we could see extended bullish momentum targeting the 1980 level.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.